the, believe it or not, November 28th session here of the Working Hub, the Freedom Hub Working Group, I should say. And we've got a pretty interesting topic for today that affects, unfortunately, everybody that we can think of. And again, we are going to be having meetings canceled for the 26th and for January 2nd, just as a reminder, but otherwise we'll continue at the 4 o'clock time slot like we've been, and everything will be posted in an archive so you can review and listen to these later for review. And we are going to be moving forward and continually getting some updates. I was commenting while we were waiting for everyone that Scott Tips is testifying in Germany at the Codex Alimentarius this week. And so we hope to hear back from him in a week or two on the outcomes of that. And that's where they were going to be doing a workaround on industry side to slip stuff into the food chain using the tag of biofortification. So it's kind of a little insidious backdoor maneuver. So we'll see if he's able to help thwart that or not. Chris, I have you here too, just as a quick interruption. And then so for today, I'd like to have Charles take the opportunity to kind of set it up for us a little bit and also give us a little advanced peek at the people we've got coming in the following Wednesdays.
Well, thank you, Jeff. And this is Charlie Fromm, and I work with Jeff at our health disruptive company and the hub. And we actually don't have a speaker set for the 3 Wednesdays in December. And I do want to, in the spirit of the open-endedness of this weekly call, invite participants to suggest to Jeff and me presenters for December 5th, 12th, and the 19th. If you yourself want to present, or if you have someone making some waves in policy reform or commercial disruption, our 2 broad categories, anything deregulatory and, supportive of our broad pursuit of happiness, right? Let's talk about them presenting. It's a good opportunity to highlight books that you're selling or a big project that needs grassroots support. So we do need presenters for those 3 slots in December, 4 p.m. Wednesdays. Let Jeff and me know. Also, we do want to follow up from these presentations with some advocacy. You heard Jeff mention Scott Tips' testimony at the International Food Regulator Codex this week. And there is a law enforced by the World Trade Organization to coerce harmonization by the country's Food and Drug Administrations to harmonize with Codex. So whether it's Mary Ruwart, who presented on her book Death by Regulation and justifiable complaints about the FDA, or the harmonization threat through the Codex apparatus, the FDA could be a locus for some of our advocacy. So let Jeff or me know how you might want to pursue that. We can just advertise grassroots alerts here and let folks just send emails, or we can do even more than that. There are different levels involved in grassroots and advocacy. Or it could be delicensure. That is a hot topic with many groups. I've been involved with that. So we do have a member of our group, Byron Slomak, with a major project in that effort. It affects healthcare, of course, and every other market. So licensing reform would be a good deregulation project for us. And then the block grant idea of devolving more programs back to the states where they belong under the Constitution. And we heard Doug Badger testify on the Republican block grant proposal, which may not get anywhere now that the Democrats have taken control of the House. And to that end, it's kind of nice to have Dan Pilla here today, because he was an early leader of taxing sales, not income. And I recall as a young Republican staffer on Capitol Hill in the early 90s, when he debated Dick Armey, who was, I think, the majority leader. It must have been 1994 or 95, because Gingrich had just taken over the House for the first time in so many decades from the Democrats. So all the Republicans, or at least the reformist-minded ones, were full of big ideas. And flattening the income tax or abolishing it and going to a sales tax, which became a huge grassroots project around the word fair tax, or phrase fair tax. And that's something that a politician I was involved with, Governor Gary Johnson, pushed heavily in his campaigns. And for all the healthcare disruptors in this call, it's a big question of how a sales tax and no income tax would affect healthcare. Because if an employer doesn't have an income tax from which to deduct healthcare expenses provided to an employee, would a business provide health benefits? That's a huge question for us to consider. And finally, with the Democrats in control of the House, how much reforms in the tax code could we expect? So taxes affect healthcare. They affect all markets. They arise opportunities for big ideas around flattening or abolishing the income tax. And so thank you, Jeff, for this opening opportunity. And I'll turn it back over to you.
Okay, well, that's great. And we've just been kind of shown a little array here of some of what Dan's been up to. And those were some great questions that Charles posed, because that is going to be a wonder. We saw what Trump did so far, but now what's going to start to happen when the new year flips. So Dan, why don't you regale us a little bit and get our wheels turning, and we'll barrage you with some questions in a littlest bit.
Well, let me just give you a little bit of background here. As Charlie said, I've been involved in the tax reform movement for a long time. I've been a tax litigator for over 40 years and been involved in butting heads with the IRS on behalf of clients all that time. And then in the early 1990s, I started to wonder, well, okay, what's a better idea? The IRS and the graduated income tax is a disaster. I've taken the position that the graduated income tax is unconstitutional. It's unsound from a constitutional basis. It's unsound from an economic basis. It's unsound from a moral basis, and something has to change. So the question is, well, what do we change to? And the idea was a constitutional model of an excise tax, and the excise tax, insofar as it would raise enough money to fund the legitimate functions of the federal government, quote unquote legitimate. And that's a whole nother debate, right, guys? What's a legitimate function of the federal government? But at least to start to fund the federal government in terms of the levels that they're at now, the excise tax would have to be essentially across the board on all consumption goods and services. And so you could abolish the income tax entirely, lock, stock, and barrel. You could abolish the IRS entirely, lock, stock, and barrel. You could apply a point of purchase sales tax on all consumption goods and services, have that sales tax collected by the states, not the federal government. So the states are responsible to collect and piggyback with their own state sales tax, and then the states remit the money to the Treasury. And that would be essentially the constitutional model that the founders envisioned, and we would free the American people from the burdens of dealing with income tax compliance at all levels, and you'd get the IRS off the backs and out of the homes and offices of all of the Americans that are out there. And so that's what Charlie alluded to, the sales tax debates in the 1990s. I wrote a book back then called How to Fire the IRS, which is what started that national debate on whether to abolish the IRS and go to a sales tax. And as he pointed out, Dick Armey was the Speaker of the House at that time, and Armey was sort of a flat tax guy. His position was, well, we should have a flat income tax, and my position was, well, no, flat income tax is still an income tax, and it's still, it still provides the federal government with the excuse to have its hand directly into the pockets of the citizens of this country, which the founders never envisioned. And so, my position was the flat tax is not good enough. It's better, but it's not good enough. And we got to abolish it completely, the income tax that is, and pull the 16th Amendment out by the roots, as it were. And to do that, we go to a national retail sales tax. And so that was my drive at the time. And frankly, we picked up an awful lot of steam with that idea during the early to the mid 1990s. And what was driving it, ironically, was IRS abuse was out of control. The incidence of the Internal Revenue Service grinding people into powder in the act of collecting taxes was just simply out of control. And in fact, the Clinton administration at that time had a IRS commissioner whose name was Margaret Richardson. I don't know where they found this lady. She didn't come out of the IRS, but her attitude, and she expressed this very simply. She said, if the IRS ever has to make a choice between spending money on enforcement and spending money on taxpayer education, she said, on a quote, enforcement will win out every time. In other words, her attitude was, we'd rather grind you into a powder when you make a mistake rather than help you get it right in the first instance. And this is the best way to illustrate how wrong-headed this thinking is you know, historically the IRS has only ever collected 2% of its revenue through outright enforcement actions like levy and seizure action. 98% of every federal dollar collected is paid to the IRS, quote unquote, voluntarily. I hate to use that word, but it's paid over by individuals and businesses without IRS collection intervention. That's really what I mean, because there's nothing voluntary about it. It's Vito Corleone voluntary. That's what it is. You know, where the IRS puts a gun at your head and says either your brains or your signature will be on the contract. That's what they mean by voluntary. And so 98% of every federal dollar collected is paid to the IRS without enforcement interaction, and yet the mentality of the IRS is clearly expressed by Margaret Richardson in the 90s was, we'd rather beat you up when you get it wrong than help you to get it right. And that's what was driving tax reform. The IRS was doing it for us. I later wrote a book called IRS Taxes and the Beast, which the Senate Finance Committee folks got a hold of, and that book provided the intellectual ammunition that drove the Senate Finance Committee hearings in IRS abuse, which later led to the IRS Restructuring Act of 1998. And here's the thing that was so masterful about how Clinton actually intercepted and deflected the movement that was really picking up a lot of steam to reform the tax code in a very substantial and meaningful way. I'm not talking about tax reform like we've seen in the last 20 years. I'm talking about very meaningful, very substantial tax reform. It was Clinton's idea. I don't know if it was his idea necessarily, but certainly he was pushing the idea of a national commission on restructuring the IRS in light of all of this abuse and all of these things that were coming to light through the Finance Committee hearings. Clinton championed the idea of this commission to restructure the IRS. And I thought, here we go, boys. This is an opportunity to finally really get our arms around this beast and choke out this monster. And I was called in as a consultant to the National Commission on Restructuring the IRS. And I remember vividly going to Washington and sitting down with the staff there and you know, they had all their yellow papers out and they were ready to write on their pads. Dan, what do we do? You know, what kind of changes do we make to this tax code to really give taxpayers some rights? And I answered the question by saying, look, guys, here's the way we do this. We take the Internal Revenue Code, we bring it up to the highest building in Washington, we throw it out the window, and we start over again. And they all looked at me with blank stares on their face, and they set their papers down, their pencils down on their paper, and they looked at me and said, okay, that's fine, except that's not our mandate. Our mandate is we got to work within the system we have now. And I said, look, first of all, I understand your mandate. I knew the mandate going in. I wasn't kidding myself. But I took the opportunity to get on the soapbox a little bit. And I said, look, guys, we are dealing with a system that is unsound. It's built on an unsound foundation. It's unsound morally. It's unsound constitutionally. It's unsound economically. When you got a house that's built on an unsound foundation, it doesn't make any difference how many times you fill the nail holes and paint the walls. You don't fix the problem. We've got to bulldoze this thing and start over. Well, that was a non-starter. I knew that. The challenge for the commission was not to rewrite the tax code. It was to build in taxpayers' rights. So what I did is I provided 33 specific recommendations to the commission on building taxpayers' rights. A number of them were codified. We wrote them into law. They got passed into law. Most notably, a single most important achievement is the collection due process rights that taxpayers have now that they didn't have before the Restructuring Act. But okay, so to circle back now. So now what we've got is we've got the Restructuring Act. We've got all these new rights, and the IRS is now brought, quote unquote, brought under control, right? And so now, whenever, and I'm talking about 1998 is when that Restructuring Act was passed. And so now, anytime you talked to any congressman or senator about tax reform, the answer you got from them or the response you got from them is, we don't need fundamental tax reform, we fixed the IRS. So what Clinton did is he triangulated the movement that was really picking up a lot of steam that could possibly have led to the abolition of the IRS and the income tax, and he re-diverted it into this fixing the abuse issue, which is fine. I'm not saying that wasn't important, but what that did is it put a wet blanket on the tax reform movement. And here we are 18 years later, and we still cannot get members of Congress to seriously entertain the idea of fundamental restructuring of our federal tax system. Now all they want to do is continue to do what they've been doing since 2000, and that's tinkering around the edges. And that's all the tax Tax Cuts and Jobs Act did. They call that fundamental tax reform. I got news for you, friends. It's not fundamental tax reform. It's more of everything we've seen for the last 18 years since 2001, guys. There've been 5,900 code sections changed by Congress. All right, and that doesn't even include the Tax Cuts and Jobs Act. Doesn't even include those changes. And so all they're doing is tinkering around the edges. And the Tax Cuts and Jobs Act is a tax cut. There's no doubt about that. About 80% of the taxpayers in America are going to see less taxes in 2018 than they have in the past. And I'm in favor of tax cuts, so don't get me wrong. It's good from that standpoint, but it is not reform. And the simple way to put that fire out, or expose the truth of that, let's put it that way, is to show you that it suffers from the same malady that the Bush tax cuts of 01 and 03 suffered from, and that is they're all temporary. All of this stuff expires in 2025. So by the time we get our arms around how all of this new stuff is supposed to work, they're going to unravel it all anyway, or at least now we go back to the drawing board and the debate starts all over again. So we are nowhere closer today to fundamental tax reform than we were in 1995 when, as Charlie points out, all of this stuff was bubbling up and these debates were going on across the country. These Army debates were going on across the country, not just in Washington. We did these things on radio and various places all around the country. We were doing it all, and it was great fun, and people loved it, and people were responding in droves to the idea of tax reform, and we got it to the point, and here's the thing that was impressive about that. We got it to the point to where the question was no longer whether we should have fundamental tax reform. The question was, which form of fundamental tax reform is the best? Is it the sales tax or is it the income tax? That's how much steam this picked up. And as I said, in the last 18, 19 years since the Restructuring Act, coming up on 20 years now, you can't get Congress to pay any attention to it. So there's the stripe the field. So if you guys want to join in and have questions or ask for additional comments, we can go from here.
Well, that was very good, and it's kind of a dismal thought when you think about what you just said there, that we've circled the wagons all this time to get to Nowheresville. I'm not sure if anybody had some added expertise in this venue that might want to kind of kick things off for us to pose to Dan.
I've got a little bit. This is Randy Fisher. I'm with the Fair Tax. I'm on the board of directors for Americans for Fair Taxation. The evasion issue has really started to percolate as far as income tax evasion and the growth of it. It's actually growing very rapidly. And the 2017 study that was funded by Dr. Cibula down in Jacksonville, $9 trillion in estimated future tax evasion over the next 10 years. I think arguably the system is starting to implode, and in part that may be accelerated by Bitcoin and cryptocurrencies. Dan, have you got any thoughts on that? Have you seen the Cibula study?
I have not seen the study. I've seen other studies, though, that talk about the level of evasion and that it's on the rise. And there's no question about it. It's undeniable that it's on the rise, and there's a lot of reasons for it. Bitcoin is number one, and I don't know if it's number one, but it's on the list for sure. And the IRS is screwing itself into the ground to deal with this Bitcoin issue. And just parenthetically, they have issued what they call John Doe summonses all over the place now for these Bitcoin clearinghouses to find the names and addresses of all American citizens, U.S. citizens, that are clearing transactions through these Bitcoin warehouses. So the IRS is going to find people that are using these things, and people are going to be in for a rude awakening. In fact, I blogged on this a couple of weeks ago about how the IRS is chasing down this Bitcoin stuff. So there's no question it's a real deal. There's no question it's increasing. And here's the thing, and Randy, this gets to what I've been saying now for 20 plus years, after I got in the midst of this reform debate and started dealing with people on the Hill and realizing that they don't when I was naive, I thought, well, gee, they're going to look at this and this is going to see this is such a great idea and they're just going to adopt it. How can they not? Well, okay, so now my naivete is gone, and I realize, and I've been saying this for more than 20 years, that they're going to adopt a replacement system when it becomes obvious that this system is no longer workable. And Randy, you're absolutely right. The system is imploding, and there's a number of reasons for it. Chief among them is that it's becoming unenforceable, not just from the standpoint of fraud, okay? Not just from the standpoint of fraud. Fraud is a big deal, no doubt about that. But the IRS itself has gotten to the point where it's trying to process so much information that it can't get the job done. Let me just give you an example. We got 152 million individual income tax returns that are going to be processed by the IRS for filing. Another 100 million individual income tax returns are going to be filed, or I'm sorry, business tax returns. We got over, listen to this now, we got over 2 billion, that's with a B, 2 billion information returns, forms W-2, 1099, all of those information returns that are flowing into the IRS. There is so much information flowing into the IRS that they cannot keep up with it. Now, you add the fact that there's a reduction in their workforce through attrition. They've lost plus or minus 15,000 workers over the last 15 years or so. Their budget's grown, but their workers aren't growing. Don't ask me what that's all about. But the fact is, and Congress is laying more responsibilities, non-tax responsibilities, at the feet of the IRS. The best example of that is the administration of the health care penalties. The IRS has got to do all that. That's got nothing to do with taxes per se. It's all about health care, as you guys know. The earned income tax credit's another example of a non-tax responsibility that the IRS has. And basically, the earned income tax credit is nothing but a welfare program that's administered through the tax code by the IRS. All right, so they've got all these extra duties with fewer people, more information flowing into the system. It's becoming unenforceable. That's when Congress is going to come to its senses, because as it sees the system collapse around it, it's going to have to rethink how it does it.
One comment I would make, this is Jeff Cantor, is that I'm based in Ohio, and here they just announced that they'll let you pay your taxes with Bitcoin in Ohio. So we're the first state to set that up. So that's an interesting thought based on what you were just discussing.
Sure. Yeah, I hadn't seen that. That's interesting.
Yeah, I've heard that that's partly a trap too, because they're trying to go backdoor then into
who's got the Bitcoin.
Oh yeah, no question about it. Once you pay your taxes with Bitcoin, they're certainly going to have the trail, aren't they?
Yes.
Yep.
But the fact of the matter is they aren't going to need that. The IRS is going to get the information from these Bitcoin clearinghouses, just like they got the information on offshore bank accounts. You guys remember, when the fertilizer hit the ventilator in the early part of this decade? Actually, before that, in the mid 2000s. When the IRS started stumbling across all these people that were using offshore bank accounts. And how did they find all these people? The offshore banks weren't giving out the information. They found the people through summonses to credit card companies, summonses to travel agencies, summonses to airlines, summonses to, the big jewelry stores in New York City and Los Angeles, that they summons these people to get information on who was buying products and services or using credit cards or debit cards that were based off of a foreign bank account. That's how they got all this stuff, and that's how they cracked the wall of secrecy in a foreign bank account. They're going to do exactly the same thing with Bitcoin.
Jeff, this is Charlie. Hello, Jeff.
I can hear you, Charlie. Go ahead.
Okay, thanks. First, let's remind folks to click mute on their own devices if they're not talking, because we are getting some background noises. I had to step away for a second. Dan, did you cover the implications of a sales tax on employer-provided benefits? That's always been a question of mine, is why would healthcare remain tied to the workplace if there was no deductibility because there was no income tax?
Well,
And it might, you know, it might improve the health system if we individualize it, like other insurance.
Well, I think the short answer is that you wouldn't necessarily have employers or companies providing company provided or company paid for health care if it was no longer tax deductible to the company. Now, that said, there's all kinds of economic reasons for a company to provide benefits to top employees to attract talent for the purposes of building their workforce, and that's a whole different question. And so I don't think that it's automatically going to go away as a benefit, but there's no question that the tax advantage is going to go away. And the tax advantage is obvious because it's really a double benefit in the sense that if an employer provides health care to an employee, the employer gets the deduction for the expense and the employee doesn't have to count it as income. And so you get that double benefit. If the employer is no longer providing the expense, the employee has to provide the expense for themselves. Then obviously you're going to have more people in the marketplace that are chasing these healthcare services, insurance, what have you. And so obviously there's going to be a lot more competition in the marketplace. No doubt about that. So the question is what is going to be the impact on the cost of healthcare? I'm the wrong guy to answer that question, but I do believe that you'll have fewer. You will probably have fewer employers providing that healthcare benefit to their workers.
That's very good. You know, I saw a little comment came in here from Chris Street. If you're there to chime in about your thoughts on the Bitcoin side of things.
Well, I happen to be involved with the first 5 people in Bitcoin and had a chance to buy 1,000 Bitcoin at $5. Not a good idea that I didn't do it. But having said that, they've chased all those people down. Finding the money flow isn't the issue. It's the institutional structures that come along. A lot of people are very afraid of a sales tax or even a value-added tax because it's like a dial where you can just click up every time you overspend a budget. I think one of the biggest issues is, and maybe that gets changed with the new economics, but globalization has offshored income streams, and this is constraining what the government can take in. Those people who have the flexibility to be globalists, clearly can arrange their affairs massively different than those people who have domestic operations and have domestic income.
Well, let me respond to that. First of all, those are certainly real objections that people have, no question about that. Let's talk about, first of all, there is a fundamental difference between a retail sales tax and a value-added tax, and people confuse the two, and they often think of the two as synonymous, and they are not. A value-added tax is a manufacturer's excise tax that is assessed against a product as it moves through every stage of production. So it's a hidden tax. It's very complicated, and the tax has the unique quality of being able to cascade. That is to say that you end up paying taxes on taxes on taxes because it's difficult to distinguish the levels and amounts of value that are added to a product as it moves through production. So that's number one. A retail sales tax is attractive and much better than a value-added tax, and avoids the problem you talked about, precisely because it's so visible. When you go to the store, you buy $100 worth of products or services, and if your tax is 20%, you got an extra 20 cents or $20 on that purchase, and you immediately know that that's the sales tax. Whereas with a value-added tax or an income tax, for that matter, it's buried. Most people don't even realize it, what they're paying in taxes. So with the retail sales tax, you see it immediately. When the tax goes up, people immediately know who to blame. Government can't push it off on big business or big tobacco or big alcohol. The responsibility lies at the feet of big government, and people know it because the tax has gone up. All right, now I'll just give you a comparison. I talked about the changes to the income tax, 5,900 different changes since 2001. In Minnesota, our state sales tax came into being in about 1963, and you can count on one hand the number of changes to that sales tax law and structure during this 60-year period of time. Why? Because it's visible, and the politicians know when they tinker with the sales tax, everybody knows government's to blame.
Well, I'm just
the other question was internationalism, right? The other issue was internationalism, and that's an issue. Go ahead.
My other question was that the system right now allows organizations such as Apple, who went for 7 years with a 0.00045% corporate tax rate, and individuals within Apple, relocated in such a way as to arbitrage their tax structure because they could arrange their affairs as to where the incomes, where the producing asset was, in this case, patents, and where the income was actually recognized. So, there's a lot of issues about tax.
This happens. There's no doubt about that. It's undeniable. But let's keep this in context now. We got a population of 350 plus or minus 360 million people in America. We got 152 million individual income tax returns filed. What percentage of the people do you think have the capacity to globalize themselves, as you talk about, to be able to move themselves out of this jurisdiction and into that jurisdiction to minimize their taxes? All right, very, very few. The other reality is this. No, just wait a minute.
5% cones out over time.
Say that again?
It's about 5 to 7% that can take advantage of these issues, but those numbers cone out over time because of compounding inflation.
Okay, you're right, and I understand that, and I agree with that. But I will add this to the mix: U.S. citizens are taxed on their worldwide income, so it doesn't make any difference if a U.S. citizen moves to Bermuda or to Switzerland or any place else in the world. If he's got income that wherever his income is, he's taxed on that under the U.S. tax code. Foreign earned income gets a credit. So if you move to Switzerland and you get a wage job in Switzerland and you start a business in Switzerland and earn income in Switzerland, certain amount of that income, not all of it, certain amount of that income is sheltered from U.S. taxes. However, if you move to Switzerland and you have unearned income as a U.S. citizen from patents, copyrights, intellectual property, U.S.-based pension, any of those types of things, you're being taxed by the United States on that income.
But isn't that really hard to chase?
Well, it depends. With the U.S. with the world banking situation the way it is now, having come under the thumb of the United States Treasury with the FATCA Act in 2010, Obama's FATCA Act of 2010, requiring virtually every single bank in the civilized world to report to the Treasury Department on accounts that U.S. citizens have, the answer is no, it's not that hard.
Great answer, thank you.
Pardon me, I had myself on mute there just to keep my noise level down. Nicholas, I was going to say, you were kind of describing a little situation that you've run into. You might want to kind of air that a little bit and let us kind of update us. I'm going to unmute you because you were a little noisy before, so see if this is okay now. Are you there?
Yes, can you hear me?
No, it's pretty garbled. That's pretty bad.
That's a bad one.
Got a headset with a mic on it, and
sounds like you got tape over the mic and a gag in your mouth, so that's not very good. We'll have to kind of broach this on an alternate occasion because that's not functioning well at all. Sorry about that.
Jeff? Charlie here.
Yeah, go ahead.
Dan, a little more focused health tax issue. Health savings accounts has been a discrete savings tool for healthcare that's been pushed successfully in the House when it was in Republican hands. That would expand deductible expenses to include primary care. And, there's a lot of movement on HSAs at LinkedIn. People see it as a great retirement vehicle with triple tax benefits. How much have you come across HSAs in your tax practice, and do you have any opinion on them?
Well, I've got a strong opinion on HSAs, and as a matter of fact, I think they were the greatest thing since sliced bread. And in fact, you can use the HSA as an example of pointing out the abject fraud in the healthcare debate in Washington. Right? Congress had the least bit of concern about American people being able to provide for their own health care. There's a couple very simple things they could do. First of all, let's set the HSA aside for just a second. First of all, what they could have done very easily is given people a dollar for dollar deduction on their out-of-pocket medical expenses. As it were, prior to Obamacare, as it was, your health care expenses, in order to be deductible, had to exceed 7.5% of your adjusted gross income, and then only the first dollar above 7.5% was tax deductible. All right. Under Obamacare, they increased the threshold from 7.5% to 10%. So they made it even harder for people to write off their expenses. Why didn't Congress, some point along the way, realizing, the healthcare crisis, the way it is, why didn't they say, okay, instead of 7.5%, we're going to eliminate the threshold whatsoever, or entirely, I should say, so that it's treated just like mortgage interest or real estate taxes. You pay $1 worth of mortgage interest, you get to write off the $1. You pay $1 worth of medical expenses, you get to write off the $1. That hasn't been the case in America for 40 years. I don't know how far back you have to go to find out when they put that threshold in. So that's one thing they could have done very simply. And the other thing they could have done, they did do, which was create the medical savings account or the health savings account, which was a tremendous situation because you did get a dollar for dollar deduction for the money that went into the account, and you didn't have to recognize a distribution as income if you used the money to pay otherwise deductible medical expenses. So it was a beautiful thing. It was a beautiful thing, and I encourage people, and I don't do tax planning around here. We do litigation work, audit defense, and collection defense, that sort of thing. But you're always running into people with planning issues, and I've done a lot of public seminars over the years, and I would encourage people at every turn to use the HSA or MSA to the extent that you could. The problem with that was there were limitations with it. You couldn't have insurance provided by your employer, and it had to be a high deductible plan and a whole bunch of other crap that they built in that would limit it. All of those, my point is, guys, all of those things could have been taken out of the law very easily to make it a very, very simple process for people to use this savings vehicle to provide for their own medical expenses. They could have very easily expanded the palette of expenses that you could pay with the HSA to avoid taxation on the distribution, and they didn't do any of that. They didn't do any of those things.
And here I thought they loved us.
Yeah, I thought so too.
I was going to say, let's take a quick diversion because I'm keeping an eye on the clock. And we want to squeeze in a little bit of an update on some of our past discussions. So I want to tap Ralph Fusatola, if you're available, or to give us a quick update on your activities.
Absolutely. Thank you for giving me the time. We discussed earlier when I was on about a case pending here in New Jersey, which I think is worthy of people's attention. And I'm looking to find my link right now. The case is Horizon versus Januzzi. Sammy Januzzi runs Atlantic Integrative Medical Center down in Atlantic County, New Jersey. He works with several physicians. He himself is a naturopath. He works with several physicians. They provide, among other things, chelation, IV chelation, or IV drips of other sorts. He thought he found that insurance would reimburse for the act of infusing, with the clients paying for the actual things being infused, and that would not violate all the insurance procedures. So he did it for about a decade. He seemed to be getting proper reimbursement, and kaboom! They've been sued. They've been sued for fraud, although not one of their clients has ever complained. And the case, in the opinion of several experts in the area of insurance coding, is an opportune moment to get the courts to define an important clause in the Affordable Care Act. There's a clause that forbids carrier discrimination among different forms of treatment and therapy. And that clause has never been construed, whether it's broad or narrow, whether it includes integrative and holistic alternatives or not. But there's a reason to argue that it ought to include whatever the customer who paid for the insurance wants. The idea that the customer is paying for a service and not for the insurance company to decide how that service is to be provided. If they pay for a pharmaceutical drug to control pain, they should pay for other alternatives that would control the same pain. It's very important from the standpoint of the alternative healthcare world, because unless you have proper insurance coding, the records don't really exist, and you can't show through retrospective studies that people have been benefited from said integrative or holistic services. There's no code, therefore it doesn't exist, and there's no way to prove that it's actually cost effective. And in fact, from the limited studies that have been done, such approaches, especially to things like chronic pain, are very often much more cost effective than pharmaceutical approaches. That's the situation. Dr. Januzzi and the couple of physicians that he's worked with do not have the resources to fight Horizon. Their lawyer is doing as best he can, but it would be good for us to raise some funds to make sure we can cover the experts and make sure that he gets paid. His name is Nestor, by the way. Nice guy. Had a number of good discussions with him. In fact, I'll be on the phone with him this evening. We've set up a crowdfunding operation to help support not just that case, but other issues in which freedom of choice in healthcare stand tall. And I've done that through the Institute of Health Research, IHR, that was founded back in 1998 by Dr. Podell, who was a teacher at our New Jersey Medical and Dental University, Karen Horvat, who ran a vitamin company called Green Turtle Bay, and I was the third trustee. I'm now president of the Institute, and our website is inhere.org, INHERE, inhere.org. If you go to the donations page, you will find a crowdfunding link for Fundly. It's a Fundly link. On that link, you'll find some interesting discussion of the case, including the 18 legal mistakes that Horizon has made, including the all-important issue of the ACA's non-discrimination provision. It could have a huge impact on the way healthcare is delivered in the United States, and it would very likely be of benefit to the folks at HEP. So that's it, inhere.org, donation section. Take a look. This is the giving time of year. We can.
Thanks, Ralph. I would say if you'll do me a favor, send me the information and I'll put it in the materials here.
Right now.
When I go there, and I'll copy it, because not everybody's getting on these chat parts, so I'll grab it. All right, that was very good. And like I said, you can see we're trying to keep up front of a few things that are going on out there, and that's why I said we're going to have Scott Tips bring us up to speed on what happens at the UN, and this is a real biggie. They've been building up to this thing for months on end, so this is a major assault on the food chain, and it seems like we're under assault from one direction or the other all the time. But since we're just talking all the fun stuff about taxes, let's go backwards again and see if we have any more questions for Dan while we've got another 10 minutes here, thereabouts. And I believe, Hashem, are you there? Looks like you were trying to ask a question and I had you muted somehow. Ed, I've got you unmuted too. Rick, I see you came in a little late. Did you have any questions? And you might have missed a fair amount of the discussion, but.
Can you hear me now?
I can.
Okay, awesome. So my question is about the constitutionality. Um, I understand income tax is immoral, unconstitutional, but what does the Constitution says that the federal government can tax, and what about the states?
Well, the Constitution doesn't put any limits on what the federal government can tax. The early legal authority on Article 1, Section 8 is pretty well settled that the federal government can tax anything. And the question is, how do they do it? Excises have to be uniform, and imposts and excises have to be uniform, and direct taxes have to be apportioned among the several states. And so, as from an excise standpoint, the government can tax anything. And as a matter of fact, if you go back pre-13th Amendment to 1909, that was the Corporation Excise Tax Act that was passed in 1909. It operated like an income tax, but it was called an excise tax because there was no income tax as such. And the excise tax was assessed against corporations based on their quote unquote privilege of doing business in the corporate structure, and it was measured by income. All right, so the excise tax was on the profits of the corporation pre-13th Amendment. So along comes the 13th Amendment and says, okay, now we can just put a direct tax on income without respect to apportionment, and so there it comes. It is no question in my mind that the founders absolutely never intended the United States to be funded by a direct income tax on the citizens, assessed by the federal government, collected by the federal government, and its collection machinations, whatever the founders might have thought they looked like. And as a matter of fact, if you read the writings of Alexander Hamilton, the first Treasury Secretary, he makes it perfectly clear that Congress expressly went away from an income tax as the means of funding the new government, because Hamilton understood the basic economic principle that what you tax, you get less of. And here we've got a new nation that's in debt, that's floundering, that's starting to, trying to get on its feet. You cannot tax the engines of growth and expect growth. And so they funded the functions of government through excise taxes and import duties. And that was the case all the way up through World War II. It wasn't until 1941-42 with the Victory Tax Act that the average American citizen ever filed a tax return. Even after the tax law was passed in 1913, only about 2 or 3% of U.S. citizens filed a tax return because the income threshold was set so high to begin with.
Thank you. A follow-up. So, do you think if the brackets are changed dramatically at this moment, would that be a helpful thing, or as you mentioned in the beginning, you have to start over?
Well, change how? I mean, listen, the brackets have been changing almost nonstop since 1913, and in fact, the principal debate in Congress in 1913 was, what are these brackets going to be? I mean, after they got over the hump on the 13th Amendment, or 16th Amendment rather, in 1913, the debate was, what should the brackets be? And of course they're all over the lot. And the reason they're all over the lot is because they're arbitrary. And an arbitrary law by definition is unconstitutional. You can't have arbitrary laws that pass the muster of meeting the due process elements of the Fifth Amendment. And so it does, in my opinion, it doesn't make any difference what the brackets are. The lower the tax, the less likely you are to have evasion. The higher the tax, the more likely you are to have evasion. What drives evasion is two things in this order: high rates and complexity. All right, the higher the rates, the more people are going to run for cover. The more complex it is, whether or not people are inclined to fraud, they don't do it right, and so consequently they just throw up their hands and say, "Forget it, I'm not doing this." All right, those are the things that drive non-payment. Let's put it that way. Let's not even necessarily call it fraud, but non-payment. So the lower the rates you have, then the less likely it's going to be that people are going to run for cover for financial reasons. But then, of course, you got to address the next question, and that's simplicity. The rates are only one element of this tax law. The question is, how do you get to taxable income? That's where you end up trying to weed through 4 million words that are in the Internal Revenue Code right now, getting to taxable income. Because once you know what the taxable income is, a child can figure out what the percentage is by looking at the tables. That's simple.
In some respects, is that just a consequence of just this Byzantine way it's grown over the years, or is that in some respects deliberate?
Are you talking about the complexity of the code, the 4 million words?
Yeah.
Oh, I think it's a combination of the two things. First of all, it's the Byzantine approach of patchwork changes over the last 70 years, no doubt about that. But the other thing is, I am completely convinced, and I've said this from day one. My first book was released in 1986, and I made the statement then, and I made this statement in that book, that Congress wants the tax code complicated. IRS wants the tax code complicated because as long as it's complicated, when you go through an audit with the IRS, when they challenge what you've done, you have very little capacity to fight back. Now you add to that the fact that the burden of proof is on the taxpayer, and the IRS never has to prove you did it wrong. You have to prove you did it right. And if you're trying to work your way through this morass of tax laws, how are you going to prove you did it right?
Right.
You can't. The IRS knows you can't, and they steal your money.
Well, it seemed like, when you described before about the simplicity of taking away that medical deduction, they've just almost exposed their whole card to all of us when they didn't make that maneuver. That was their intention, was to keep everyone somehow tied to the ranch. And really, if they're looking to try to know everything there is to know about you, what better way than to try to do the income tax the way they do it?
Sure, absolutely.
They know more about you than Google and Amazon that everyone complains about. So that's pretty intense. Well, we're drawing to a close here, so I say we have got time for one good last question, and then we will archive this for future review, and we'll post some links here, like I said, and then we'll announce who we'll have for next week when we get somebody settled in for that purpose. So on
Jeff,
that note,
here.
Yeah, go ahead, Charles.
Also, I want to invite Dan, as we do all our presenters, leave us with a website or a writing, your blog or whatever. How can we get involved with, the free market reforms that we all on this call mostly support? We hate taxes and we want a better tax system. So what do we do?
Well, as far as the blogs are concerned, I'm on social media everywhere. I'm on Facebook and Pinterest and LinkedIn and Twitter and YouTube and all that stuff. So you can like my stuff on Facebook. I'm posting stuff on there all the time, as well as all the other stuff there. I would recommend 2 books of mine that I've written. Both are available at danpillabooks.com. That's the best way to get to my website, danpillabooks.com. And the 2 books are the Irs Problem Solver, which was ranked by the Wall Street Journal as the #1 tax book in America. And then the other book is How to Win Your Tax Audit. Now, you might not be going through a tax audit, but the book spends a great deal of time on the philosophy and problems with the income tax and the problems with IRS ubiquity and IRS enforcement. And so it's a great primer tool, so to speak, for understanding really what this system is all about. And plus, I have a lot of prevention stuff in there as well. So if you go to danpillabooks.com, and I see that they just click the link there, and you can find those books there. And then also on danpillabooks.com, I've got my new book. I've written 15 books, 14 of them on IRS and 1 of them on culture issues. And the latest book is called Salt and Light. It's a book that's got nothing to do with taxes. It's got to do with American culture, and in particular American Christian culture. And it's called Salt and Light, The Secret to Restoring America's Culture, and you might find that a fascinating read too.
That's great.
Fantastic. Well, very good.
Also, I think Randy Fisher, if you're still on there, how can folks get involved?
Randy left, unfortunately.
Okay. Well, I think his group is Americans for Fair Taxation. And to get behind that.
Yep. Well, I'll put.
Yeah, I would agree with that. I would agree with that. Yes.
Okay, very good. And again, we're going to continue to follow up. This is just the beginning of our conversation. So again, I appreciate being here today, Dan. It was excellent. And we'll kind of start taking on some new topics, because obviously the new Congress is coming, and so that's going to change potentially some of what's going to or not happen with taxes. So we'll definitely want to stay well in touch. So I want to thank everyone for making it today, and I will see you a week from today.
Bye, everybody.
Thanks, Dan. Thanks, Jeff.